I was hoping that today you will have a big smile on your face. Joining from a different throne, I can see, not from a usual location.
Yeah, I think for the occasion.
Yes, only for the occasion. Okay, what is the best way now to take advantage of the current setup?
The best is to, I think, hold on to your horses and not try to do much. Not try to go all in if you have some cash today itself, because uh, contrary to what was the expectation of a few, and that's what I said over the last couple of months, people seem to be unnecessarily bearish. My view was not bearish in the sense that the view was not that the government's suddenly going to change and some new dispensation is going to come up. So in that context, I think things look constructive. Where there were some policy flip-flops, I think that's where some opportunity comes up. So I think the sugar, ethanol, etc. story and the ecosystem around it, that's where I think we could see significant wealth creation again over the last next couple of years.
Would you be also looking at selling? Because the strength, I think, is going to be more technical in nature and there would be excesses which will get created. So while we may look at the medium term and the long term picture, which is bright and which will only get brighter because of a stable government, but in the short term, is it time to perhaps use excitement and euphoria to your advantage and raise some cash or sell some stocks which you always been wanting to sell?
If you have been always wanting to sell something and you couldn't get the opportunity, that's always the case. You should always do that. But I think it's foolish to unnecessarily increase cash in the assumption that you will want to buy cheaper at this point of time. Because if the strength of the mandate is as strong as what it reflects, then I think there'll be continuity, there'll be strong economic growth over the next few years. And in that context, trying to play for a 4-5% move here or there makes no sense. On the other hand, there would be some hugely overvalued stocks, or there will be companies which are actually not doing as well, but you were just holding on in the hope they move out. In case those stocks rally, I think it always makes sense to exit them and try to get into something better.
Question for you, Sandip Sabharwal. Now, today I'm assuming, and tomorrow I'm assuming, and later this week I'm assuming that there would be an uptick in policy related stocks, defense, manufacturing, power, railways, ships, roads. If these stocks rally another 10-15% from here, is it time to perhaps take some chips off the table? Is it time to book profits in policy stroke Modi related stocks?
Only if your time horizon is, let's say, 3 to 9 months or that kind of horizon. So but if your horizon is long enough, then you don't really need to do that, because there will be corrections. There could be deeper corrections of 10-20% also sometime when the global market construct corrects, etc. But I think even in the global context, seasonally, June to September, we are entering into a phase where normally, like 9 out of 10 years, we have not seen big corrections historically. So, expecting that kind of correction now. So, I think if we, since we crossed May without too much damage, I believe that the next time frame of corrective move could be more near September, October, unless and until the budget does something which disrupts the taxation regime and creates negativity in the market.
Would like to get in a take, if we could get a little bit more micro, Sandeep, as to which stocks you really think can ride the wave and build onto this momentum. For instance, since May 2014, some of the wealth creators have been an Electra Green Tech or a JBM Auto. We've also seen an APL Apollo, Saregama. Within the broader end of the market, are there any specific pockets or stock ideas that you can really look at that would one could look at for the long haul and capitalizing on this momentum?
Yeah, I think in the broader markets, Praj Industries, which got battered because of the ethanol flip-flop, I think that is in a very good position now, because both on the compressed biogas and ethanol, the investment cycle will come back. They have worked on new initiatives, and the results declared last week, even in tough times, were very strong. So I think that's one stock which should be on the lookout for sure and could be a significant wealth creator. Then I think this entire sugar basket, where again the stocks got battered because of the ethanol policy, that's where opportunity will also come. The best stock out there is Balrampur Chini, which we own, and that's also trading cheap in my view. So I think these stocks which are down because of uncertainty present opportunities. X of that, many stocks in the rest of the areas which you talked of, railways, defense, etc., will continue to do well, but they are not the ones which actually fell.
Within the large cap banks, given that, what the FII short positioning in, given the kind of large FI ownership in some of these private banking names, where is it that you would want to deploy fresh capital? I know previously you've always liked Axis and ICICI Bank. Buy some more, you think?
Yeah, nothing changes, but as on today, 800 points up, I am not a buyer in large cap banks, etc., because uh, you don't want to buy on a euphoric day. So I wouldn't be a buyer in those segments as of today. But whatever I have, there's no reason for me to sell. So we'll continue to hold on.
What is the SGX indicating? 800 points higher. Kunal, you don't want to buy when there is such a big gap up start, right? But then when should you buy? Wait for a decline or wait for markets to stabilize for next 2 or 3 days and then come?
Yeah, absolutely. So, the event euphoria, the event play would be out today. Most part of it, maybe some of it could be left tomorrow. My belief is that maybe the India VIX could actually not cool off today much, but the cool off could actually happen tomorrow once the event is actually out of the way. So historically in 2019, 2014, so on, the India VIX generally tops out on the day when the election results are actually out. So you may see a trim off, but I think the actual cool off could probably happen from tomorrow onwards. So I think the better part of the trade could start to emerge over the next couple of days once you see the India VIX normalizing to 14, 15 levels and then staying at those levels on the downside. But the breakout stocks could probably be getting highlighted today. For example, if you see short covering bout across the private sector banking names, now that's going to be not just a temporary theme, but it's going to be a very strong theme going forward. And I would probably sense that the likes of HDFC Bank, large cap names which I highlighted earlier, L&T, etc., these stocks could probably take the next leg forward for the indices going forward. So I would probably believe that it's a matter of choice now for a short to medium term trader. If he's looking at an immediate kind of a trade play, then I would believe that the major part of the cream could be out today. But I think for someone who's looking out for patterns on the medium to long term, then I think much more better patterns could be available over the next couple of days.
Okay. What is SGX indicating? Or GIFT Nifty? 834 points, 3% higher. Now this is a pure reaction to the exit polls. The real, or the verdict actually comes out tomorrow, which means that if markets are already reacting to the exit poll, markets are unlikely to react to an verdict tomorrow. And if the verdict, if numbers are this way, that way, you may actually see market getting adjusted. History has taught us that while exit polls are crucial, all exit polls are pointing to a similar kind of a direction, but ultimately these are exit polls. That's one thing. Second, there is a lot of global interplay also at play. There's a lot of macro interplay which is at play, which is GST numbers, we've got GDP number which came on Friday. All those factors in a sense are also at play when it comes to today's gap up start. The question is, if FIs, Sandip, and that's something which is worth some thought, which is that the reason why markets have not really gone in a large outperformance mode, at least if you compare that with global markets, is because FIs have been selling. And I'm assuming that FIs were selling or hedging because of the event risk. What happens when they stop selling? What will happen to the market? Because in all probability, now once the event risk is behind us, there is no real need for them to hedge or sell.
There's no reason for hedging, so I think some of those hedging trades will go away. But I think many of the FIs were not selling because of the event risk. I think they were taking more a call on valuations, trying to deploy money elsewhere where some other emerging markets are cheaper, etc. So I think that play was going on. And that play might not change in the near term, given the fact that pure election results don't actually change the earnings picture immediately to any great extent. So I think things it remains more on status quo. So directionally, longer term, it becomes quite positive, but short term, tactically, nothing much changes. So I think that stance, what foreign investors overall take, is something we need to see. My guess is any big return of money, etc., could happen post budget if based on what people see as the economic policy for the third term rather than immediately.
I've always believed that for our markets, if there were to be a meaningful fall, that would be led by the globe. As if now, of course, the global markets are also extremely buoyant and it's like a rising tide phenomena. But given that you've got US elections as well later this year, do you sense some global volatility to kick in?
Elections, US elections and volatility, typically, if you go back historically, there's no clear correlation. So I don't think so. I think the big thing about developed markets is that government changes do not really impact the market so much. So in Europe, we see so many coalition governments, so many countries where governments fall in 6 9 months, some new prime minister comes up, etc. They don't change things so much. I think the governance part is more relevant to emerging markets which are on more on the development stage. So I don't see that as a risk, but valuations at some stage become a risk, and seasonality of corrections comes in. So I think for that we could have to wait for some more time.
Pre-open rates.
5% higher, Nikunj, on the Nifty.
Yeah.
Wow.
Hello. Hello.
The first circuit is 10%.
It will not be circuit. I mean, it will not be circuit. But even 5%
We're
is not
too
going
deep
to
a market
sustain.
now to move 10% on one day. Yeah.
So, it would be interesting to see, and I'm looking at markets not from 2000. See, 2009 was a completely different kettle of fish, no retail participation. Market size was different, depth was different, companies were different, risk mechanism were different. But let's say if you compare the markets in last 2 or 3 instances, 2014 and 2019, and what has happened to the market one month after the election and 1 year after the election. I guess 1 month after the election, the meaningful moves are not there. Even though markets applauded 2019 verdict, markets lagged the 2019 verdict. So if markets, it is evident that the current BJP government is coming back. What has happened to stock market even when markets have liked the verdict? And in that data point will just come up on your screen. Frankly, Sandip, is he still there?
Yeah.
So Sandip, now let's look at 2019 and 2014. Markets liked the election verdict. BJP came to power, BJP was voted back to power, but in both the instances, the 1 month change was nothing extraordinary. The same could happen this time also.
Yeah, exactly. So that's why I'm saying that markets today are placed in a manner where you don't buy a 800,000 point gap up, except for specific stocks and sectors where you think things could change because of the policy issues which I talked of, ethanol, sugar, etc. So where depending on how the stocks move, I would like to buy. X of that, I think you wait out, and uh, because it's of continuity, it's not something, it's an event which in any case 95% plus was my expectation that this is how the event will play out. If someone had a totally different view, I don't know what was the logic behind that.
The pre-open rates itself are indicating a huge gap up for us right now, and the rupee as well has opened, and you are seeing a 0.5% of a move coming in. 82.99 is where we're currently at, and the currency, the bond yield has started off 3 basis points lower at 6.94. That, of course, is the 10-year.